What's going on, guys? Good morning. Welcome back to another pre-market live here. I hope you are having a good day or a good evening so far. Just wanted to come on here and give you guys my thoughts on what's going to be cracking for this week. We just had a solid boot camp with about, I want to say 30 to 40 people attending per day. That was really nice. Went through the basics of trading, and for those of you that missed it or didn't sign up for some reason, or missed it in general, it will be available on YouTube in about a week or two from now. I just want to give preference to the people who signed up to actually have access to it first, and that's just a tiny reward for being timely. So let's continue on with this breakdown this morning. SPX is finally reaching our target, right? If you just kind of look back at I want to say maybe a month or two back, we've been talking about how eventually, once this breakout happened and the retest happened, that will eventually chug on to get up into the key pivots at which was around the 61.8 extension and at 5,300. So we're finally here now, knocking on 5,300's door. Now this level is going to be a key level, partly because it is a golden ratio number, and then at the same time, we are likely to see some potential pressure at this level because of market dealer exposure, right? So if we break through this level strongly, then that's going to kind of force price action to move and squeeze to the upside. And if we fail to break this level here, then we are likely to get a potential retest of the 52.10, 52.20, somewhere around there, right? Which is this level right here. So that will be your key pivots for this week. 5,300 is going to be a key pivot. Once we touch 5,300, we'll see how we react with 5,300, and then beyond 5,300, if we get rejected or blast off further, we will have a new target. So very quickly, let's have a look. If we do break that 5,300, where is going to be the next target? Okay, so very quickly, let's plot a new Fibonacci, right? So we want to take the bottom of this wave and go even higher now, potentially to this one right here. That would be a full extension. Okay, so now your in this case here, when you go for a longer extension, a full, even deeper extension from a previous cycle wave, that means the previous all-time high, right? I'm talking about previous all-time high. When is the previous all-time high? I'm talking about here, this point here, which is 2021 December. So you take the bottom of the bear market in October 2022 all the way to the top of the December 2021 ratio, right? We're talking about this whole wave here, this whole wave. We want to know what is the ratios that will extend out, right? So from this point forward, from here. So that points are all these extensions here, and those extensions will have a 38.2 at the 5,300 level, which is roughly where the 61.8 was. And then after that, it's much higher from there. It's 5,600, 5,650. That will be the next target if we blast off from here, okay? So it's always good to have a little bit of a foresight into how this is going to move for the next couple of weeks. Now, do I think we're going to like blast off to 56 right away? Probably not, right? Probably not. But there will be pullbacks along the way. There will be more opportunities along the way to trade. And that's just the plan on SPX right now. So very simply put, 5,300 is where we want to touch. We see what happens at 5,300, and then once we see what happens at 5,300, which is around this area here, I'm going to mark it out for you guys, like right here, right? After we see what happens in this area, then we can prep for a potential mini correction, or we can blast through this and then start making higher highs this way potentially, right? So something of that nature, you kind of get the idea. I'm drawing these for entertainment purpose. Remember, whatever I draw is for entertainment purpose. Technical analysis is not meant to guide your entire trading strategy. It's there to supplement it, right? Remember that. So just putting these out there are just for my own information and my own entertainment, and I'm sharing it with you guys, obviously not saying that I'm going to be right or wrong, because no one can ever predict that. But it's always good to have a plan. So my plan would be wait and watch what happens at 5,300. If I get a strong rejection there, I'd be happy to take some short positions. If I get a blast through, I'll be happy to take some long positions. But I want to validate 5,300 first, because that's going to be a key psychological level for the markets. Good morning. What's up, the best 1979? How you doing today? Thank you guys for coming into the live stream. Hope you guys can just leave a like. That would be cool. Let's look at the NASDAQ now in comparison. Okay, this had bull flag after bull flag. We had a big consolidation here now, and let's have a look at this daily. So I'm going to delete this off now because obviously this is not going to be valid anymore. And you know what? I'm going to even get rid of all these bottom ones because you know what? They're not in our universe anymore. We don't even need to worry about them. This one might be. I'll leave it there. This one's not going to be in my universe anymore unless I really need those points, right? Try to declutter your charts whenever you can, right? That's the aim here. Okay, so previous Fibonacci that we took was from this wave all the way down here, and we have yet to hit that 61.8 extension, right? That was another wave. This was a different wave cycle. So this was the bottom of the lows in October 2022, and then I went up all the way to the highs of the, let's say, the previous upswing wave, which was July 2023. Okay, so I'm looking at the ratio between these 2 points now, right, to predict and give me the ratios for where the extensions will be on the upside for the next cycle of this wave. So you might, by the way, it's the same thing if you use this to here, right? You can, it's just that the Fibonacci numbers are going to be a bit higher. So you can fit it to whatever levels you are trying to look for. My point is there is no right or wrong way to plot it. You just use the method that you know, and you use the method that you're comfortable with. I mean, my Fibonacci style is completely different. It has extension numbers, it has negative numbers and positive numbers. Yeah, my Fibonacci is completely different from most people. So I just wanted to put it there. So with NASDAQ on the daily, we can see strong uptrend, no retrace yet, no change or break of structure, nothing like that. We have, however, some consolidation, right? Within the last week on the 20th of March all the way to the 24th of March, we have seen some consolidation. Sorry, not 21st of March to the 1st of April, right? The last week or so, we've seen consolidation here. We need NASDAQ to be strong here in order for S&P 500 to be strong, right? That's the leading indices because of the tech saturation. And if that doesn't happen, then likely we see a retrace back down into 1800. So we really need to break this all-time high at 18490. But so far, so good, right? We've seen a little bit of support here. You can see a little bit of these areas here being bought up a little bit. That has been pretty nice around this, what is this level here? Let's see, 18200, right? 18200 seems to be a support level, interim support level right now. So going to the 1 hour, you can see this has acted as a support for the past couple of tests. And then we got bought up very irrationally on, what was it, Monday, right? Yeah, Monday. And the whole rest of the week, it's just been, oh, sorry, not Monday. This was Friday or Saturday, right? Yeah, it's like Friday or Saturday, must be. And since then, it's been kind of just fading away, not really doing much. So with NASDAQ, I don't have really a thesis here, but I will show you individual setups that I'm looking at. I also did post this in the Discord on our sniplist for this week. So let's run through them really quickly. 4 setups, Morgan Stanley for earnings run-up play. Remember, we are in that window now where we have pretty much a 2-week window in which nothing happens until the next earnings period, okay? And in the next 2 weeks, you'll see financials will start to report again, and then the next earning period starts again because the quarter just ended, and we had quarter end rebalancing. We had a whole bunch of things that happened, right? So that will be pretty much the next wave that we'll be watching for now on. So these next 2 weeks are going to be crucial to finding setups that will run in the next earnings session, right? And that's just a really good, easy way to play the macro situation. I like those because you can find some nice setups if there is good consensus around a specific stock. Okay. Now that wave never pulled back 50%, but price is respecting it. I thought Fibonacci requires 50% to consider a relevant wave to pull accurate. Yeah. So you're talking about this wave right here, right? You're talking about the wave that I used here, right? This one, right? When you have a wave that has not gone down in to retest the 50%, and you are intending to still use it for the next target for the upside, it has to be followed with another impulsive wave like this, right? So if if the wave has not touched 50%, it doesn't mean that you can't use it for the next bout. It just means that this has now started a new cycle. It's started a new series of waves, right? So you can see that 1, 2, 3, 4, 5, right? And then 1, 2, 3, 4, 5. That's a 5-wave, 5-wave. And now you have a 1, 2, 3, 4, 5, and then more than a 5 here at this point, right? I mean, 1, 2, 3, 4, 5, right? I don't know how you want to count those waves. That's why I don't like Elliott wave theory. But essentially what I'm trying to tell you is, if there has been a deep pullback and that pullback lasted for, how many months is this? July all the way to October of last year. That's enough time for a new wave to form. So therefore you can now use these 2 points as a potential ratio. As I was saying, it's also easily solved if you move this to here, right? Then you're just using the previous backlog of this wave, right? It doesn't make a big difference. You could also potentially use this wave here, which is the exact same spot, right? You see that? So you could use this high here. That's the exact same spot, pretty much. Similar ratio. But if there is a long consolidation, which is very, very lengthy like this, couple of months, then you can use that ratio, right? You can use this ratio because this is a new cycle here. This is obviously a pullback, right? A bull flag setup that broke out on the daily, right? So that's the reason why, in my opinion, you are still okay to use that wave. It's not considered a short-term pullback. It's a long-term pullback, right? Okay. Good question though, Dustin. Thank you. Now, next, IWM. I have been telling you guys about this for months, right? I don't know when I started telling you guys about this, but I have been speaking about it for months now, right? That as interest rate expectations improve, this will be the sector that will be running hot because all of these stocks will start being repriced in terms of valuations. People will start expecting the interest rate environment to improve, financial conditions to improve, and in that case, you'll see all the IWMs start to run, okay? This morning, we got a nice little commentary here about financial conditions. I'll show that to you. US financial conditions begin to tighten in mid-2021 and through Q4 2022. The peak headwind to growth was felt in second half of 2022 to first quarter 2023. As that headwind faded, economic data started to surprise and US GDP forecasts were revised higher through most of 2023. This is all accurate, right? Entering 2024, financial conditions are now a tailwind to growth. So for some of you that don't understand financial lingo, headwind is going to be a barrier, right? It's a wall. Tailwind means it assists in growing. Means it's adding on. It's making it easier to grow. Okay, just to make sure you understand the verbiage here. So you can see that finally now, after policy was driven into tightening conditions in 2022, 2023, conditions are starting to loosen now. Okay, now remember something. There is a very important caveat that I need to lay about this because you can see here the market's priced the peak forward rate policy by the end of 2022. This was the previous policy rate. And at the beginning of this year, how many did we have? We had the expectation of how many rate cuts? 8, right? And what did I tell you guys? The market's bonkers, right? I said that will definitely not be the case. We'll probably end up getting 3, 4, right? And now I think it's probably 2 or 3 rate cuts this year, right? I mentioned this way in advance. I told you guys this will happen. And not trying to stroke my ego. All I'm saying is I did say this because I knew that at that moment the market was bonkers, right? There was no way we were going to get 8 rate cuts. But anyway, the market still rallied ahead of it, right? And that hasn't changed. The perspective of the market hasn't changed. But what is important to note here is that when the Fed announces the possibility of a rate cut, the market's going to likely move in the opposite direction first. The market will correct downward first because there will be a whole bunch of people that will likely take profits off the table, okay? There will be a whole bunch of people that will take profits off the table. And number 2, historically speaking, the data always suggests that when the first rate cut happens, the market tends to correct first and then rally, okay? So now I'm not saying that this is going to happen. All I'm saying is there is a tendency for this to happen, and you should just be aware of it. So when the rate cut does get announced, expect the market to not run higher because it's been priced in. It should correct downward first and then rally after that. So that big correction that we get after the first rate cut is a very nice entry, which will take a couple of months. You will have time, right? It's not like it's going to happen overnight, but you will have time to react to it, and during that time will be a good entry for the next run after that, okay? Because we'll have loose financial conditions for a little while, right? As inflation comes down, the job market's still healthy, economy's still strong, right? People are all scratching their heads thinking, why is this market up when the economy's so bad? The economy is actually really good right now. That's the thing. People don't understand how to read economic data. That's the problem, right? You have GDP expanding, you have job market really strong, you have trade that's still okay, right? What else do you need, right? Taxes are still pretty good. The Fed is able to fund. The Treasury is still not running out of money, right? They're increasing the ceiling for debt, right? Who owns most of U.S. debt? U.S. owns the most of U.S. debt. It's not owned by external countries. I hope you guys know that, right? The U.S. owns a lot of debt to the U.S. The U.S. doesn't own a lot of debt to foreign nations. In fact, Singapore has higher debt than the U.S. to foreign nations, just so you guys know. And most of that is all trans-governmental as well. So just, fun little Easter eggs for you guys. Okay, let's talk about opportunities today. First of all, utility sector. This is one of the sectors that tends to break out when there's a correction on the S&P 500 on the rise. And this would be very curious timing if the S&P 500 rejects up here and then utility breaks out at the same time, right? So I would be very interested to take some positions in this sector. Now, what are the top holdings in XLU? Let's go have a look, right? Because that's important. Next Era, NEE, Southern Company, Duke Energy. These are the three. So very quickly, let's just do a quick little analysis. So NEE is already running, right? Oh, what do you know? Perfect setup, right? I actually didn't intend to look at this today, but I'm doing it with you guys on the live stream, and it turns out that's a pretty nice setup, right? So this is a key pivot point here. You can see that it has been sold off very aggressively, has been entering a kind of accumulative stage, and even put in a higher low, right? Higher low, there's a high here. So now you're looking for a next breakout and then potentially retest any one of these levels up here, right? So the next levels you want to retest are going to be up here, and then the next level after that would be, I want to say, that's gonna be tough. I think here is more apt. Let's also get a Fibonacci going for this one, right? Taking into account this wave. Okay, this was too exaggerated a wave. Let's use this wave. Yeah, this wave has retraced pretty much 50%, right? So we can go from here to here, right? Okay, that could be a good one. So you guys know my style of trading. I like to look at things that are rotating in sectors, right? When I see tech is overbought, right, and I see something like XLK being overbought like this, and then I see an opportunity coming up in utilities, and then I see the top holding utilities about to break out, what do you think I'm going to think, right? Obviously, there's going to be an opportunity here to trade. So for NEE, I'll be looking at this for a potential breakout after $65. Let's call it $65. And this will be my determining zone as to what's going to happen. If we break out and we are able to validate 64, 65 as a support, I'll be happy to play this up into the 70s, right? And if it rejects here, then you just short this back into the 60s, right? So very simple trade plan with NEE. We'll be watching very closely. I don't think you will get a entry until maybe midweek, probably. So very likely that I won't take the trade until a little later this week, but who knows, right? Market's unpredictable. So that's one sector and one setup that I like. Now, am I going to bother trading the rest of them? No, I don't want to bother trading the rest of them. I will only focus on NEE because it has got the biggest holding, 13%. This one with 8% and 7%, I'm not that interested. It's half, almost half, right? I don't want those. Okay, so I will only focus on NEE. This will be a top watch for me this week. Okay, next, moving on to the sniplist. Morgan Stanley, ER play, run up potential, right? This one has both upside downside play. Key pivot is going to be 95 for the breakout, 100 calls above 95 for the breakout, and then if it gets rejected at 95, some 95 puts. This is an ER run up play. It has ER in the next 2 weeks. I will be likely to take this position if I can with very low risk. I want to look at the options chain when the options chain opens up and then survey what the options chain looks like and then make my play. Next one, PayPal. We spoke about this last week. It's back in my rear view mirror. 68.50 breakout is what I'm looking at for upside play. That would be $70 calls. 68.50 reject will be 65 puts. Very simple. So that's these two levels right here, right? Either breakout or reject, okay? Very simple. You're a key pivot point. These are the best kind of plays to make, right? All the ones at key pivot points. Next one, Meta, right? Also key pivot point, right? Breakout or reject above or below. So 480 bounce is going to be a long play at 485 calls. 475 breakdown. It needs to break down here. This is the thing. This is where it needs to be breaking down for validation of the bearish play, right? So don't be fooled here. If NVIDIA breaks 480, don't go enter short just yet, because there is another weird ass kink in the data here, which needs to be validated first, okay? This is something that you guys often miss, and then you go trigger happy to take the short position, and then you get clapped when it starts getting bought up. So be aware of that. And then for the last one is Apple, right? And Apple's a very straightforward play. You have 170 as your key pivot. So 170 bounce gives you 170 calls. You have to be careful with Apple. So the reason why I've gone 170, you realize I've put a note there. Be quick with this one, mind the in the money strikes. The reason why I've put 170 and then 170 calls for the bounce is because with Apple here specifically, it's going to be very heavily influenced by the S&P 500 and NASDAQ performance, right? So this setup itself, you have to be aware that it's going to be susceptible to market changes, very sensitive to index movement. So whatever that you see, if you get a 170 bounce, then you can play the long position. If you get the 170 breakdown, right? And for me, I don't want, oh, did I make a mistake typing this? I did make a mistake typing this. Let me amend this. It's not supposed to be 159, it's supposed to be 169. That's what it is. So 169 is the level at which I will take Apple short, below 169. And the reason for this is very simple. It needs to break below this point here. Right? Once again, same rule. Don't get yourself messed up, right? It needs to break below this here. Okay? So for a short position, I need a break below here. This level here. Not this level here. Not this level here. Because both of these points can still be invalidated and bounce higher. Do you guys understand what I'm saying here? Right? So very simple rules for engagement with these. That's all I have for you guys today. If you have questions, drop them right now and I'll answer them. If you have chart requests, etc., I can do them right now. If not, leave a like behind for me if you can. I would truly appreciate that. Social Security owns much of that. Yes, I agree. I think some of individuals, they don't understand how the U.S. debt system works, and so that it is what it is. I mean, a lot of people will believe that the U.S. debt is a problem, and I can say that it's not actually a problem. Yes, you guys owe trillions of dollars, but it's to yourself. So as long as you don't owe it to other people, it's more of a you problem. You know what I mean? All right, any questions? It's going to be a good day. It's going to be a good week. Dollar index is still around this 104. It's been creeping higher a little bit. I'll be watching this one. If it breaks above 104.90, that might put some pressure on the S&P 500, right? You can see the yields for 10-year. They are already climbing pre-market. They're up 1.23%. That's also going to put some pressure on the S&P 500. But once again, we've seen this happen multiple times, right? So don't say anything till it happens. Don't act on anything till it happens. You don't have any real reason to go massively short just yet. But you should be careful. If S&P 500 dips below 52.50, what is this level here? Sorry. 1 second, let me just give you the lowdown here. If the S&P 500 dips below 50, let's just call it 52.50. Yeah, 52.51, right? If it breaks below 52.51, then you're looking at some potential bigger wave structure correction of some kind, right? So this would happen only in like a kind of a snapback pullback sell-off situation, and that will be how I would potentially take a short position short term. Okay, alrighty, have a good day. Rest of you, I'll see you on the trading floor. And once again, I put the free link to join the Discord in the chat. You can feel free to join. I think I also put in the description of the video, so you can join the free Discord if you want. We have a free subscription to Discord now, and you can join the trading floor on there. All right, I'll see you guys on the Discord. Peace out. Bye-bye. See you Wednesday.